Hi, we just passed 11 o'clock and we are ready to start. My name is Rasmus Køjborg, and on behalf of HC Andersen Capital, I would like to welcome you to today's event, where we will focus on NORDEN's Freight Services and Trading Division. With me today to tell us more about this part of NORDEN, I have the pleasure of welcoming Christian Winther Christensen, who is heading the Freight Services and Trading Division. So a warm welcome to you, Christian.
Thank you, Rasmus.
And before I hand fully over to you, I would also like to welcome you, all of those who signed up for today's presentation. As usual, you can ask questions in the chat room in the lower right, and then we'll take the questions afterwards. And then, of course, we record the presentation here and we'll put it on our different platforms afterwards. With that, I'll leave it to you, Christian. The floor is yours.
Thank you. Thank you, Rasmus. And welcome to this deep dive into Freight Services and Trading. I'm Christian Christensen, who is the CEO of NORDEN and head of our business unit, Freight Services and Trading. I was hired 5 years ago to transform this part of our business. In simple terms, you can say we have transformed from an old-fashioned long-only operator to an agile shipping and trading company delivering freight services. I would like to start with the outside looking in, because the context, or rather the, let's say, market environment, really sets the premises on how we operate. I hope this slide illustrates exactly that. We are seeing very high level of market volatility, and we don't expect it will ease in any time soon. We see this volatility in our dry market and in our tanker market where we operate. We experience daily, weekly, and monthly changes in this market rates and opportunities, which means that we have to have an agile approach to market like ours. Our only constant is actually change. For this reason, NORDEN has positioned itself to embrace market volatility and be able to adapt in a constantly changing market environment full of what we call market inefficiencies and mispricing. Plenty of opportunities across our 11 offices and across all time zones. So our focus for today is a deep dive into how we in NORDEN have set up our operator business in the short term to make use of this market volatility. Today we are focusing, let's say on this slide, we are focusing on the asset-light part of our business called Freight Services and Trading, outlined on the right side of this slide. In Freight Services and Trading, we operate nearly 500 ships worldwide that are leased for various periods between 1 month up to 2 years. The ships we lease some are from our other business unit, Asset and Logistics, but the vast majority is from other owners in the world, and we do it on an ongoing basis, changing the fleet, matching the composition of our cargoes. We operate in the dry cargo and product tanker markets, which I'll get back to you in a second. An important fact to bear in mind before we dive into the specifics is that NORDEN operate in tramper business, which characterized both our dry cargo and our product tanker markets. Unlike a liner container company, which have a fixed sailing schedule, much like a bus schedule, our business is more like a taxi service. We position our ships for the areas around the world where our customers need the cargoes to be shipped. As such, our markets are very fragmented, and even if we are top 3 carrier in the world, we still only carry probably below 3% of world volumes. So it's a very fragmented business and very unlike the container market. The analog between a bus service and a taxi service is a vital difference, and I'll show a few examples of how this comes into play during the presentation. To extend upon the concept of tramp shipping, you can see, as it's illustrated on this page, that we are transporting various commodities around the world. We are in some sense the invisible conveyor belt that connects the world, and we stay attuned to the constantly changing demand and supply of commodities on a global level. Some of these products are integral in your daily life. The gas for your car, the diesel for the trucks and for the buses. And an example of the chair that you sit on. The chair that you're sitting on watching this live seminar has been most likely been on a long, long voyage. It probably started in an iron ore mine in Brazil, where the iron ore was mined. It was shipped all the way to China. In China, it was manufactured, put into the chair, and all the way back on a container vessel to Europe. That's a very, very long supply chain. And we are part of this very important supply chain. Matching, let's say, so with that market context in mind, the way we create earnings in freight services and trading is by matching the demand and supply of world commodities with the right vessel at the right time. Simply put, this is expressed in a daily hire rate. But there's multiple variables that factor into the business model, and that's where our expertise comes in. In other words, let's say in other industries, you would probably see an automated approach to this, where you would have, where you cut out the middleman, like Uber has done, like Airbnb has done, where you have an app that even connects the two different sides of the equation. But it's not possible here because shipping is such an analog business and rather complex. In essence, our expertise lies in navigating through all these many moving parts and quantifying them so that our customers don't have to. And that requires human skills, lengthy experience, and understanding of our clients and long-running relationships. And, which is becoming more and more increasingly important for us, applying an extensive range of data points that we can use to assess the market risks and opportunities on an ongoing basis and make better qualified decisions. From the 6.4 billion data points that we touch upon daily, yes, 6.4 billion, we use many of these data points to predict the market or try to predict the market. It helps our people to make better decisions simply. And we analyze the global cargo flows, the vessel fuel consumption, commodity data to specific details on the current ship or the port, all the factors we are engaged with. If we, based on analytics, can predict the market tomorrow or even next week or next month, we can trade it and we can increase our trading margins. So we are very curious on this part. This also enables us to embrace risk in a quite unique way. And I mentioned earlier, embrace the market volatility we see out there instead of being passively impacted by volatile markets. This means that we know exactly down what type of risk we are willing to take every single voyage, and we are able to factor in all these factors that a human being simply cannot calculate. So this is based, again, the fueling of data combined with the human brain is extremely important for us. Needless to say, we also use data to run our risk management framework. I'll come back to that a little bit later on that. But this is how we apply our expertise in a constantly changing environment. And it's a trading-based approach to shipping, and that's a big part of understanding how we operate in NORDEN. With this in mind, I would like to provide some examples of how we actually earn margins in this business. We make money in two ways. Margins are coming either from our core business, which we call our base margin, or it comes from our trading margin. I'll try to illustrate that on the next couple of slides. First, we talk about base margins. Our base margin business is a main engine of our business. It's our core business. It's where we employ probably 80% of our resources. It's a part of our business. It's the most central part of our business because it's our core product to the market. We deliver freight service to our cargo customers, and we drive out margins from this business on a daily basis. Our profitability depends on our ability to combine the cargoes and ships in an optimal way, a bit like a taxi service again, and we try to avoid sailing empty, because that's not a lot of revenue in sailing empty. We utilize our scale and size to obtain the best prices in the ports, to procure the cheapest bunkers, and generally using our scale to deliver a better product, and we get paid better, thereby higher margins. And NORDEN's brand in this business is outstanding. And this is something we hear from our customers, obviously, but it's also proven in the fact that we have grown 11% annually over the past 3 years, whereas the general market has grown 2-3%. Again, this is our core business, our base margin, where we're able to create profits in any kind of market because freight still need to move, cargo still need to move. We'll continue to grow this business organically, and we'll continue to produce reoccurring margins. The other way we make money is through our trading margin, which we have sophisticated over the past few years. On this level, we assess the market risk and opportunities, as we saw on the earlier slides, and we decide how to position ourselves accordingly. We do this on many levels, ranging from the overall market exposure, which type of ships we want to have most exposure in, which region we want to specifically position towards, and what kind of time buckets we want our positions to be in. We have in some sense managed to commoditize freight, which enabled us to adjust our freight exposure, and which we in shipping can label as trading the short long, or the long short as you would like. In other words, if we're bullish on the market, we lease in more ships than we have cargoes. If we are bearish and we think the market's coming down, we take on more cargo commitments than we have ships. And we do this continuously across the globe. Like with other commodity traders, the most important thing in trading for all commodities is to know your downside risk. And for this, we developed a state-of-the-art risk management framework where we monitor our risk live. In other words, it's described down to the dollar and in various dimensions where we have exposure across the markets, regions, and vessels. This is unique for shipping. With a strong risk framework in place, it liberates our 9 different profits centers, our 100 traders in their trading within their specific region or specific vessel types. Liberating in the sense that they know exactly and down to the dollar what kind of risk they are taking on in the market. Extremely important. I'll try to explain how many markets and how many trading opportunities we're exploiting every day. It's like an onion, if you can kind of visualize an onion with multiple layers. I'll try to describe some of the layers at least. First of all, probably most importantly, especially in these times, we have to consider, should we have most risk in tankers or in dry? Secondly, which ship type or which segment among our 5 vessel types has the best, let's say, the best earning outlook? Where are the best risk rewards with these ship types? Thirdly, and for each of these 5 different ship types, should we have an overweight towards the Atlantic or towards the Pacific area? Fourthly, then we need to decide, let's for instance say we decide to have ships in the Atlantic. We need to decide, should that be in the Baltic, in the Black Sea, US Gulf, East Coast South America, West Africa? Again, multiple trading opportunities. And lastly, if you dive into a specific area, we could take the Baltic as an example. We count ships, we speak to our customers and try to predict on a micro level the supply and demand. If we have a cargo customer, they have one cargo, or they have 2 cargos, and there's only one ship in the region. Actually, the price can be anything. Doesn't matter what the overall market is. They need to ship the cargo. We have the ship. So again, if we are bullish, we go long, meaning that we increase our number of ships. And if we're bearish, we book more cargos than we have ships. But of course, this changes all the time and according to how market develops. All in all, there are tons of trading opportunities every day, and nothing we do is random, and it's all carefully evaluated and put into a bigger risk-reward picture. Can you imagine that we have 11 offices worldwide and about 100 traders looking for good deals, delivering freight products, and always on the outlook for optionality? And again, talk about optionality. Don't even get me started, actually. We are in this fantastic business, and you cannot mention it to anyone, but we're in this fantastic business where optionality is almost for free. Let me give you an example. When we charter a ship or when we hire a ship for 3 months, very often we get another 3 months for free as an option. Okay, that sounds very strange in any kind of market. In highly volatile markets, this is obviously extremely valuable. In some cases, when you charter a ship, you might even get a purchase option included. Okay, so let's put it into your context. It's a bit like renting an apartment for 1 year, and then you have an option to rent it for another year at the same price. And by the way, maybe at the end of that period, you can buy the house or the apartment at the price that was 2 years ago. That's very unique to this business, and we have managed to kind of commoditize that. And with our volume, we have in front of us a huge optional component that we trade around. And in volatile markets, options are golden. This we all know. And just on a final note, let's say a final takeaway, to sum it up, and before we head to the Q&A part, which I'm very much looking forward to, I want to finish with 3 main takeaways. Firstly, our expertise lies in the matching and pricing of the many moving parts within the dry cargo market and the product tanker markets. We are huge believers in data, which combined with a big portion of experience provides very good results. Gut feeling is good, but much better if it's supported by good data. NORDEN is far ahead on that actually, and nothing we do is random. Secondly, we are continuously utilizing the market inefficiencies, mispricing, and optionality across the globe 24/7, and we are able to adjust our position very fast when we see the opportunity. So looking at NORDEN from the outside, you as investors, you are simply not able to estimate how we are positioned at any given time, but instead you should just trust and look at our business model that I just described, that our ability to read the market and our historic track record. And lastly, we believe that we have built a unique model that will deliver steady returns in both low and normal markets. It has the upside potential to deliver alpha returns in times of high volatility. In other words, high, I would say, downside protection with an extraordinary upside potential, meaning, in my view, a very strong risk-reward profile. That was actually it. I hope we have left a lot of time to Q&A, which I'm looking very much forward to.
Very good, Christian. Thank you very much for an interesting presentation here on your business. We had some questions coming in here, and as I didn't say in the beginning, but you're of course welcome to state your questions in Danish, and we can do the translation if you're not comfortable with the English. But there are a few centering sort of around your competitors. Could you give us sort of an indication on who are your competitors, sort of both on the dry bulk and the product tanker? Who are you usually fighting with over the deals and the trades?
We have, again, it's a very fragmented market. So our competitors varies from where we are actually. On the dry side, one of our biggest competitors is called Oldendorf. It's a privately held company in Germany. But otherwise, we meet our competitors in various regions. It can be a small competitor here and there. But so again, we carry only 3% of the world commodities. So the world is very open. So we don't focus so much on competitors.
Good, very good. And then there's a few questions centering around. There's one very specific, sort of the Chinese lockdown, and there's another one on sort of the overall challenges on sort of disruptions of the global supply chains. How do you see that both now and sort of in the longer term?
Oh, that's a big question, a very big question. I think we described on the strategy page, we described that there will be, we believe there will be more geopolitically issues and more sanctions in general going forward in the world. And that means that our business model of being asset light and more agile will, all other things being equal, do quite well. And we embrace that volatility. Specifically on a lockdown in China, we have analyzed it, and we do that all the time when we have these situations. And short term, it has created some, let's say, congestions and inefficiency, tying up quite a lot of ships, meaning that the market out there got a little bit firmer. But long term, it's demand destruction, which is not very good for dry cargo. So it adds to, let's say, some of the clouds that we see in the dry cargo market at the moment.
Very good. And could you also give us sort of, there's a few questions going on about rates. where are the rates at the moment? That could be on the and on the product tank part, and where do you see them going from here?
Our product tanker, I mean, on the, let's say on one of the, as I mentioned, this onion that I described, one of the first layers that we have, it's very important we get right, is our exposure to dry versus tankers. I can give you an example. Only 8 weeks ago, we had 70% of our risk capital employed in dry. And we have swung this position. So today we have 75% of our risk capital employed on tankers, being long in a tanker market. Maybe our average cost is well below $15,000. And the market right now for product tankers, this specific market that we are quite exposed to, is actually in some parts, it's on an average, it's $35,000 per day actually. And that's an extremely good market for the product tankers. And we have a fairly bullish outlook for the product tanker markets in the coming years. The oil stocks are very low around the world, and clean products needs to be moved around the world. And with these disruptions, you see all these spikes coming up. So it's a very good time to be long in product tankers.
Very good. And if we look at sort of the container industry, the market has been used to very high rates in that part of the market for quite a long time. Is there sort of any substitution effect to your dry bulk? Have you seen anything that sort of affected your business and the rates in the dry bulks from the container rates being at a very high level?
Yeah, it's a very interesting one, because I think that container market has actually been used to very low market for a long time. And then we saw the spikes a couple of years ago on the back of COVID. But yeah, let's say back in February 2021, we saw this continuing, the spiking of the container rates, and we felt and we saw many new customers coming to us because they didn't want to ship in containers because they were left behind by this bus schedule. Sorry, there's no space in the bus. Your container is on the pier. Sorry, cannot ship. We are more like a taxi service. So when they call, we come. Of course, we also price it accordingly. But we have seen a lot of the cargoes that used to be in containers going into one of our segments called handysize, which is the smallest segment we have. It's about 35,000 tons dead weight with some cranes. And so we have seen a lot in that sense. So already early last year, we positioned, or we swung our position from Panamax into the handysizes, and within 3 weeks actually we became all-time long in handysize because we had just a lot of new customers coming. So that was also, handysize was also the winner among our 9 profit centers last year. We are then conversely, we are also looking very much about the container rates going forward, because they have peaked. And at what point will the customers then go back to containers? And but fortunately, for us at least, some of these customers are used to a horrible service by the container service companies. So we believe that with a good customer service, that some of them will stick on our handysize bulkers. We hope so at least. So we believe the handysize market has some good legs still. So.
And I guess you also have some flexibility and perhaps more agile in not being dependent on specific harbor sizes for at least a good majority of your vessels. Is that correct understood?
Specific, you said harbor sizes?
Yeah. I guess some container ships can only go into specific harbors, and they can be congested, where you can be more agile, I guess. Is that correct understood?
Yes, that's correct. Also, we get paid for waiting time. So if we come to a port and the customer is not ready with his cargo, or we cannot come in, then we get paid. So it's a little bit, again, it works differently. The pricing mechanism is different from the bus to the taxi, and we are running the taxi service. So a tramper business is called in our lingo.
Very good. And could you also put a few words on, there's a question here related to sort of when you have the embargoes on Russia, or the isolation on the product tank business, how does that affect that part of the business?
Of course, when that happened, we had numerous game plan meetings and try to analyze it into all kind of dimensions and details. And let's say the sanctions are not very easy to operate in as a as a shipping company, because they come step by step, and they're not all clear. So we have a team of sanctions people just looking into the sanctions. But anyway, we have come out with, let's say, our analysis is that it's quite positive for our business, especially the product tanker market, because you have new trading routes, you have cargoes that instead of Russian oil going into Europe, you now need to take it from China, we believe, etc., etc. So there are, I could speak, maybe not me, but one of my analysts could speak an hour about that. So, but again, it's those kind of that kind of volatility. Is it stressful? Yes. Is it surprising? Yes. But again, this is what we live off. So as long as we are curious with the data, as long as we have good people to analyze it, we have a lot of experience, then we can trade it. So as simple as that.
And there was also a question here, sort of related to this, sort of to the LNG market. Is that a market you would enter with these with the options that are now there after the ban of the Russian gas?
No, that's not in the plans.
That's the short answer. Yeah,
it's a short answer. We have a lot of let's say a lot of segments and products, you can say, that we're already trading, and we need to be even sharper on that. And again, we are only carrying 3% of what we are doing. So that the whole world is our scene in many ways in what we are doing. We need to focus to be the best.
Very good. And as we could see from your presentation, as surprised me a little bit, there's a lot of different markets, regions, etc. You can play, you can trade. So what is sort of the most important? Is that sort of the split between your product tanker and the dry bulk, or could you put a few words on that?
It depends on, let's say, I think everything is important. You can say where there's biggest margins in this environment is probably where we split the exposure dry and tankers, which we, as I described before, got quite right. But we do have, overall, we have a monthly game plan meeting in both the tanker and the dry, where we analyze we look at the macro backdrop, we discuss commodity flows, and we evaluate the risk reward for each vessel type, for each basin, Atlantic or Pacific, and each region. And then we kind of size those bets according to our conviction, and then we execute. And on the desks, on the teams, I mentioned the Baltic team before. Well, they have daily game plans. They have daily smaller game plans and action plans, you can say. So that we have a lot of strategies going all the time. And that's the good thing about this market, because there's so many inefficiencies. It's not like stock market where it's traded by the cent. We have so many inefficiencies, so many mispricing, and so many good customer relationships that need to move this cargo. And often the freight that we deliver is such a small component of the total cost picture. So nothing we do is random, and we will continuously use our market insight and experience and data to create, hopefully, alpha returns. So.
Very good. And there was a question here sort of related to the grain harvest. We hear some news stories that there's a risk that it might be below this year, and there's also some bans on export from different countries at the moment, or where transport is not possible. Could you sort of put a few words on that and say that you have your dry bulk ships that are used to transport grain? Would you be able to put that in other markets and in other products to transport?
Yeah. I mean, the market, the dry cargo market is extremely, you can say, liquid. So if there's no grain there will be some coal there, or there will be wood pellets there. So it's simply a matter of us analyzing. Okay, maybe the Brazilian harvest seems to be a little bit reduced because of some weather issues, as an example. But we can also count the ships that are en route to Brazil, and where do we believe that what does that mean? It can still be a good market, but maybe fewer tons. But still the world has to eat, so that will then move to Australia instead. Then suddenly Australia will send their grains in multiple directions. So let's say on the Brazilian harvest maybe means that we'll need less Panamaxes in, let's say, South America. Now, just as an example. But that means maybe we need more Handysizes to Australia. then we do it this way. Then we trade that opportunity as well. It's kind of spread trading, but in our kind of commodity. So again, nothing we do is random. We of course sometimes wrong, but we are more right than wrong. So.
And is that also the case with the sort of the product tanker vessels, that if they have been used for some kind of storage or transport at the beginning, are you then limited on the on future usage?
No. On the other hand, it pops up. Then the commodity or the need for transportation pops up in other regions. So we then need to analyze, where do we think this new demand or new supply will come from, because the demand is definitely there. But where will the new supply come from? So in the product market, we have also multiple markets, but for us, it's very important if the ships are around the US Gulf area or if it's in the Pacific area, because Europe area has been a little bit challenged with this situation. So again, many things goes into this analysis, and they trade that on a daily basis. So again, and this I would like to stipulate is that it's all within this very well-defined risk framework we have. And it's risk management. It's very hard to put our market into a risk management framework. But when you trade, and like I guess some traders are listening here, it's extremely important you know your downside, which is a challenge for many shipping companies. But you need to know your downside, because then you can size your, you can say, bets, your positions accordingly. And this is as a trader, you need to put some bets on. You need to have a position, and I don't mind that. But I want to know if we are playing with $111 or $112 or $113, and that's a difference. That's a bit unique to shipping. So
very good. And when I look at sort of your trading business, there seems to be a little bit of similarities sort of to the brokerage business, sort of in investment banking. But could you give a few words on how much is human here and how much is data driven? I guess from the old days in shipping, it was human and gut feel, but I guess a lot of it is driven today by the data availability you have. And could we put a few words on that?
I don't think it mirrors the broker business. I think it mirrors more commodity trading business. But it is a very analog business, and again, our customer relationships are extremely important. We actually have a customer event here today in the headquarters with 650 clients coming in from all over the world. But that's another story. But our customers are extremely important in this context. But in order for us to price things correctly and to make the right decisions, you have what you call gut feeling. I think gut feeling is almost invented in shipping. It seems like that. But it's almost also a negative word. For me, gut feeling is not a negative word, because gut feeling is a lot of experience from your brain, from your heart, from your stomach. And I have a lot of experience as a trader, but my track record is so much better when I infuse it with good data, with enriched data that will make my gut feeling decisions or my decisions simply better. I can give an example. I think in my career, you can say, before data became an issue, I've been a good trader, you can say. Maybe I made 7 out of 10 decisions correct, all kind of decisions. Should we be here or there? What market should we focus on? Where? I do believe that with data, we are making 8 out of 10 decisions correct. And for traders out there, that difference, that's a hell lot of money. And that's what we believe in. So we don't see data we just see data as helping us become better and more profitable. Again, we are touching 6.4 billion data points every day. And not just
impressive. That's very impressive. Could you just, Christian, could you also elaborate a little bit on the link sort of to your asset and logistics division on a daily basis? You said in the beginning that you could either do business with them, but you could also go externally. Could you just put a few words on how that works?
They manage the assets and the long-term leased vessels, and we very often charter ships from them on arm's length distance at the market rates. But they only have less than 100 ships, I think, in their portfolio, and we are running 500 ships. So it's just part of, let's say, it's a very good supplier of ships for sure. but everything is done on market terms. It helps to create transparency in the business units, and it creates. It also, let's say, it's very two different skill sets. Running an asset management and a asset light business. Asset light business like me, it's very much human capital. I dream about my not only my customers but also my colleagues. These are the most important ingredients in let's say the asset light cocktail, of course. So and it's a little bit different on the asset side where you have the huge capital employed and you have tax and you have safety and OPEX and all these things. It's a different mindset. And that's why we split it. So
very good, very good. And I see we are running a bit out of time. A few last questions for you, Christian, please. Here, there was one here. Sort of, where do you feel most vulnerable? What are you most dependent on? And also a little bit sort of on the counterparty risk. What's the size? What's the biggest counterparty risk you have?
We have a very diversified, again, it's very fragmented business, so we have extremely diversified, let's say, customer base. I don't have the exact percentage, but we are way down in percentages from our biggest clients. We have a counterpart team, or let's say a credit risk team of 3 persons just vetting counterparts. And in our part, we have customers all around the world, so vetting counterparts is a big job we have. And it's vetting like you have banks vetting their counterparts, but it's also infused with a lot of knowledge about the company and about the management and so on. We have all seen that you can have a lot of off-balance sheet risk in some of these customers, which we probably know from our market knowledge and so on. But it's a big focus because nothing worse than being hit by counterpart issues. So.
Very good. I think we're through most of the questions. There was one last here on share buybacks and dividends, and I think I will refer to your homepage for that. There is an ongoing share buyback, and there's details on that on your investor side.
I think we finished for now, at least the share buyback.
Yeah. So very good. But I think we'll finalize with that. Christian, thank you very much to you and Noan for a very interesting presentation here today.
Thank you very much for inviting me. Appreciate it.
Thanks a lot for all the questions. It's been very useful, and it's very good with the dialogue here. It's very interesting. So with that, I'll just say wish you all a nice day. Thank you.
Thank you very much. Thank you.